Welcome back to Fast Market out here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our Cash Tag segment. We're taking a look at Tesla. For that, we want to bring in our next guest. And we've got Andy Swan, the co-founder of Likefolio, joining us today. All right, Andy, let's talk Tesla. It's in a different place now than it was earlier this year. And the tide seems to have turned in terms of Tesla's favor. But what does your data show?
Yeah, it really shows that things are going Tesla's way, very much so. This is a company we've been bullish on for a very long time, continue to stay bullish on because it's one of the biggest vision companies in the world with probably the greatest entrepreneur the world has ever seen at the helm. So it's pretty tough to bet against, especially when the Likefolio data is showing the way that it is. We're seeing a year-over-year change in just general consumer chatter about Tesla's brands up 61%. That's much higher than any other automaker. And more importantly than that, a real proxy for demand for Tesla, because they don't have traditional dealerships. A real proxy for demand for Tesla is web visits and people checking out the cars and even ordering cars on the Tesla website. Those web visits are right at all-time highs here. And the most important part for me of this is that this isn't unlike GM's EVs that we talked about earlier this week. Unlike that, this isn't just about the tax credits expiring. We have seen continued strength through the month of August in Tesla web visits, which tells us that the company should have a pretty positive outlook moving forward on this earnings call. And we think that's going to be what this is all about, along with the other concerns, Optimus, autonomy, et cetera. We think that demand for Tesla vehicles is very much back after a really tumultuous start to the year.
Andy, we all know that the pull forward when the EV tax credits went away at the end of September, was a big reason that they beat on deliveries moving forward. How important is the CEO Elon Musk to this company? He's back in the helm. He's back leading. We haven't, I think it's going to take one quarter to kind of get a grip on if we're going to see a resurgence back into EVs. They're lowered the price on the Model 3 and Model Y by $5,000. That may help a little bit. But is this all contingent, in your opinion and on your data, that as long as the economy's doing okay, this company's going to do okay or maybe better than the legacy OEMs, because GM beat their earnings pretty solidly, that stock got a nice boost, but we've already seen a big run here in Tesla.
Yeah, we have. On the flip side of that, Tesla is right knocking against 52-week highs. I think that's $488 per share. So I think if Tesla can get a good outlook and can get good earnings in the books, then there is some pretty clear sky above the current levels that could. This stock has been known to make enormous runs very quickly because it's heavily shorted. The option market sometimes allows for gamma squeezes, et cetera. So I think that the upside exposure here, the potential far outweighs the downside risk. There's certainly downside risk, though, with Tesla, because, like you mentioned, it's very contingent upon one man at the helm. It's very contingent upon a lot of products that don't exist yet in the marketplace. Optimus robots, self-driving robo-taxis that are truly everywhere. There's a lot of promises out there that have yet to be delivered. But what we see in Likefolio data is a very strong, very loyal consumer for Tesla vehicles and a lot of anticipation around their future product lineup that could give them extraordinary distribution advantages once they do kind of cross the Rubicon and flip those switches.
Okay, Andy, you make a great point about a lot of it hinges on one man. It reminds me of, basically like how Apple used to be with Steve Jobs and, based on visionary, right? And so as long as he's in leadership, then you can kind of look towards the future. And he does make a lot of promises that sometimes take longer to fulfill, but I think that the goal for Musk, whether you like him or not, is to fulfill those targets. But let's talk about like what's in front of us. So EPS expected to come in at, what's that, 53 cents per share. Revenue is expected to come in at nearly $26.5 billion. When you think about that and how you all view this one, what's the earnings score on this one for you all?
Yeah, we're moderately bullish. Got a plus 34 earnings score on this, and which is really kind of surprising to me given where the stock is over the course of the past year, and again knocking on those 52-week highs. I really thought that the earnings score would have a difficult time being bullish, but again, I look back at consumer demand mentions, Tesla web visits for all of the different brands on the Tesla website are at or near all-time highs and continuing here into October despite the EV credit falling off at the end of the quarter. So we're pretty bullish. We think they have exceeded expectations and hope to get some serious, really more concrete guidance in terms of robotaxi and Optimus in this call, but we'll have to wait and see.
Andy, real quick here, just on that, the Optimus and then the full self-driving, the robotaxi, that's going to be, that's what everybody's pricing into Tesla right now, that it's going to start to expand. Do you guys see any data that kind of, reflective of your web visits and some of the other data that you brought us, that is reflective of that, hey, it's really going to start to expand in 2026? Or is this going to be another one of those promises that he comes out with and then it kind of gets pushed a little bit? Because I think that's the concern for investors.
Yeah, it's probably both. What we're seeing from a qualitative standpoint, in a lot of the data we look at, is that the people that have had access to the next version of full self-driving are talking about it being leaps and bounds better than the current version and much, much closer to true autonomy. So that gives us some confidence that while, as you guys mentioned, Elon likes to push the limits, he likes to push his team, he likes to push investors to think big and think fast, and sometimes, a lot of times, misses those deadlines, but gets to the destination. We think that's the trajectory Tesla is on here, and we think that with what we've seen from the very few people that have had access to the latest, kind of insider full self-driving software, that they will get to that destination, and Wall Street will continue to give them the valuation that anticipates that happening in 2026, because the technology is moving in that direction at a really accelerated pace after some lags over the last 18 months.
Yeah, and some of the technology is essentially there already in some ways, because I remember I was in this Uber that was a Tesla that, it was, he said it was FSD, and he said, do you want to see? And so, he did a little bit of the full self-drive, meaning like the driver was there, but hands off the wheel. Yeah. So it was a little wild and felt very futuristic. Andy, I feel like you have a thought really quickly.
Yeah, no, I use full self-driving every day. I have for a few years, and the big steps, the exponential steps in this technology have been breathtaking. 2 years ago, I would have compared it to a pretty new 15-and-a-half-year-old permit driver where you're kind of ready to grab the wheel or hit the pedals at any point in time away from them. And now it feels like a seasoned adult is behind the wheel with some edge cases that need to be ironed out.
Interesting. All right. Well, we'll leave our conversation there for now. That's Andy Swan, co-founder of Likefolio.